Good morning and thanks so much for tuning into the Trade Setup. I'm Niraj Shah and the story is about what India is doing, right? $5 trillion of market cap, crazy valuations in some sectors. At some point of time, you've got to take a deep breath and ask yourself, are some of these moves justified? I mean, silver price rise, yes, but what Hindustan Zinc is doing is quite astronomical, really. And we'll get to all of this. But yeah, so that's the long and short of it. There is momentum, but in select pockets, there's just too crazy a momentum and you've got to be careful out that. But let's start with the global setup first, very quickly. So what's happened? Fed's bar has reiterated that higher interest rates are needed for longer, but there is a change in the script. Globally, inflation figures are coming off in a lot of markets. We know that's happening in Europe. But Canada inflation too slowed to about 2.7%. The core has eased further. And remember, we'll see the same thing in Q2 of our financial year as well, post-June, because of the base. Global bonds as a pack rose on a new sign that inflation is easing around the world. Stock futures are little change after the S&P 500 closed at a record. Remember, this is ahead of the NVIDIA earnings, so that's to be kept in mind. But effectively, treasury yields, which fell for the first time in 4 days, probably remains the big story for the day today. So that's something you got to be bearing in mind. Now, what does all of this mean for the trade setup? Remember, as I said, global markets are okay. Asia is flattish. Will our markets continue to do well? That's the key question. Now, remember, there is a very bullish pattern in our markets with very strong volumes, which is a positive sign. Do you normally like markets which are moving up and are moving up on good volumes? And we saw the signs of that yesterday. And you know that people are not coming out and selling, viewers, because I'll tell you why. Look at the call concentrations. The significant call OI is at 23,000 and 23,200 levels. That's the point. Sellers are not taking any risk. I doubt there are too many people who would come out and convincingly short the market. And I think that's the other big trigger until the election results are out. I know everybody's waiting to deploy money post-elections, but I think until elections, traders will not come out and give very large shorts, especially after PM Modi coming out and talking about the markets and the capital markets importance as well. And I think watch out for commodity stocks. Actually not quite ONGC, but the metal names in particular. They might have a bit of a pause today, but the likes of Hindalco, Vedanta, some of the metal steel stocks, even ferrous stocks might all continue to do well. So that is something you got to watch out for. Shameless plug at 8:20 on the editor's cut. I'll be talking about why is it that metals are doing what they are doing. You might want to tune in for that on TV as well. Okay, now let's move on to stocks. I'll first talk about BHEL, and there the performance, you have to admit, has been weak. I'm just trying to draw up my notes, so just give me a minute while I try to do that, to just give you a reason why this is happening. So BHEL, the companies, the bad thing, I mean, one, the results are a miss on all counts. Now, why did this happen? I mean, the EBITDA margin fell about 400 basis points on higher provisioning versus provisioning by write-backs in the last year. So that's a problem. And when asked about whether the margins will be better, because the exit margins may be slightly better than the annual margins, the company said no, we'll probably do the same margins as we did in FY24. So therefore, that's a bit of a bummer. Even on the con call, the optimism around margins was not there, but there's optimism around power. So everybody's right, thinking of the thermal power wave, and the BHEL can do well too. They expect coal power projects of as much as 12 gigawatts being ordered annually. It's a positive for BHEL. They have won 9.6 gigawatts of coal power plant orders in the year ended March, which is a big thing. They've spoken about defense as well. They're bullish on the defense business. They're targeting more orders for the super rapid gun mount. In fact, they are also saying the air defense guns are a big ticket opportunity, and they plan to present a prototype in the current year. So do watch out for BHEL. I think it'll start off lower, but there is a bit of an optimism around coal thermal power projects, and BHEL is a beneficiary there. So watch out for that. Action Construction Equipment, you have to admit, very good set of numbers. I'm just, again, trying to just get my notes. It's with every quarter, they tend to do well. It was up not only 36% YOY, but about 11% QOQ as well. EBITDA was strong. Margins were very, very strong as well, as a result of which, I mean, operating leverage essentially playing out for margins here, and as a result of which the net profit did very well. Won't be surprised if there is more in store for Action Construction Equipment because of the PAT performance that they have done in this session. Dollar was the other big one. The good part about dollar industries is that the valuations are not expensive. That's the big thing for dollar. And, very strong after a long time, very cheap and strong all-round growth. Revenues up 23% at 500 crores. volumes grew 17.6% and 21% for FY24. EBITDA at 57 crores versus 11 crores, in line with the estimates. Margins at 11.4% versus 2.8%. Look at the difference. The only thing is, Bloomberg or the consensus was estimating this, and which is why some of it might be in the price for dollar industries. Net profit at 34 crores versus 46 lakhs, by the way. That's the difference. The estimates were 37 crores. So in line with estimates, but very strong performance. You got to give credit to dollar industries. I think it could do well. The problem with GTN and Hitachi are the valuations, but the numbers very strong. GTN revenues up 30% at 914 versus 703, ahead of estimates. Margins well ahead of estimates, 12.1 versus 4%. The estimates were 8.4%, as a result of which the PAT is also ahead of estimates, 66 crores versus 52 crores. There was a loss in the corresponding quarter last year. This one could do well, as could the next one, Hitachi Energy. Revenues up 27%, 1695. Estimates were 1508, but the margins is where the trick has happened too. 10.7% versus 7.1. The estimates were 7.6, so well ahead of estimates, and a very strong quarter. PAT at 114. The estimates were 67 crores. The corresponding quarter was 51 crores. Again, could do well. But remember, for both of these stocks, the margins are at egregious, the valuations are at egregious levels. So that's the problem. Be careful if you're trading them. Let's pull up the next stock, Laxmi Organics. Not too expensive, and I thought the numbers were okay. Revenues are up 8.4%, 792. Estimates were 712 crores. Margins at 11.4 versus 7.9. The estimates were 8.4 crores, as a result of which the PAT too did really well for itself. Splendid numbers, I would say. You can't find too many faults with this. I missed out on Godavari Power and Ispat and Greenply Industries. Both of these had fairly good set of numbers as well. Let's move on to the next one. GSFC, very weak numbers. Revenues down 17.6%. Margins took a big hit, by the way. Slam dunk, 1.3 versus 13.7, and PAT 2 corrected quite significantly. So this one too could see a bit of a slam dunk today. Remember, all fertilizer companies have the same problem. Steady end prices, but raw material prices are moved up, and the subsidy has come off. So therefore, there is a problem for GSFC as well in the session today. Gulf Oil, I thought it did okay. Revenues were up 9.8%. Margins expanded a little bit. Will come up on your screen, 13.5 versus 11. PAT up 40%, if I'm not wrong. Yes, 40% at 87 versus 62 crores. So I think this did okay too. Just one last stock, and that's not on results, but on some announcement. It's a 1,200 crore market cap company. Don't know too much about it, but they have signed a 15-year pact with BSNL for rollout of sites across India. Maybe Suyog Tele could see a bit of a reaction today, so you should know why that is happening. A long and short of the trade setup today. Some brokerage notes, but nothing that has stood out thus far for me. Maybe we'll try and revise them earlier and try and get to you in tomorrow's session as well, some key brokerage notes. But otherwise, I think today's day will be marked by the result reactions, and watch out for the commodity stocks. They've had a splendid move. Even if there's a pause today, most smart money is actually very constructive on some of the commodity stocks, particularly the non-ferrous ones in the aluminum space.